So in this video today, I'm breaking down the 5 ways that you can fund your next or your first fix and flip moving forward. What's up everybody? In today's video, I'm breaking down the #1 real estate question that I get as a 21-year-old investor and one of the biggest misconceptions about real estate investing. Now, a lot of people see the things I'm doing and they're like, how the f are you funding these deals? Do you have a trust fund? Are your parents rich? What's going on? But that's not really the case at all. And that's one of the biggest misconceptions in real estate. And one of the misconceptions that I had going into real estate, that you had to have all of this cash and buy all of these houses cash in order to flip. That is not the case at all. So without further ado, let's dive into the 5 ways to fund your next fix and flip or buy and hold. Now, coming in at #1 is gonna be cash. Now, I told you guys that you don't need cash, so that's why it's just one of the 5 options. But it is the foolproof #1 way to do it. You come in, you buy the property cash, you renovate the property with your own cash, and then you go resell it and make a profit. Nothing much to it. The downside of it, obviously you need a lot of cash. Here in Las Vegas, in order to buy a flip, let's say you buy it for $220,000, you have to put $30,000 into it, you need about $250,000 of cash. Not everybody has that. So the second way to do it is to get a hard money loan. Not a lot of people know about this because you have to be in the industry to kind of know a little bit about it. A hard money lender is in the transactional business. In other words, they're not gonna lend you a 30-year fixed loan. Instead, what they do is they'll lend much shorter term loans with much higher interest. But for flippers, that can be a huge win. If, for example, you go out and you find a house that's worth $300,000 after it's fixed up, but you're able to go and contract it and lock it up for $200,000. Now, this hard money lender is gonna look at the property, realize that, hey, when it's fixed up, this property is worth $300,000, he has it for $200,000. Even if this guy doesn't pay us, we have to foreclose and take this property back, we're gonna have a really good house for a very cheap price. So yes, we're just gonna lend them money really, really quickly. And that is the benefit of using a hard money loan. Now you're able to get short-term funding really, really fast. You're gonna pay much higher interest, but if it's a good deal, there's not a problem holding that interest because you're not planning to hold it for a long time. Another way to leverage your own cash with a loan would be to get a traditional mortgage. This comes in at #3. Like I told you guys, when you get a traditional mortgage, you're gonna have to jump through a lot more hoops. You're gonna have to make sure that you have 2 years of work history, your credit's good, all of that stuff. But in return, you obviously get a much better rate and a much longer term. So cheaper money. However, there are a few problems with getting a traditional loan to finance a flip. For one, it's gonna take you much longer. So if you need to close on this property fast, especially in this really hot market where everybody's trying to close really fast, they're bidding the properties up, it's gonna be a bit of a problem trying to compete with other investors. And 2, they're not gonna lend if the property is in really, really bad condition. They just can't insure it. Traditional financing can be great though if you're looking to live in this property. If you want to buy this property, move into it, and fix it up slowly here and there. Do the kitchen 1 month, do the bathroom another month. It can be a great option because now all of a sudden you can hold it for a longer period of time and you're paying much less interest than you would on, say, a hard money loan. But let's say you're not looking to do a live and flip and you need to fund fast, but you don't want to get a hard money loan and you don't have the cash to fund it. The #4 and another great way to fund your next flip is private money lending. Private money lending is essentially just having another person lend you money for your project and either giving them a profit split or giving them a % return on their money. This private lender could be absolutely anybody. It can be your friend that just got an inheritance from his grandma. It could be your parents that have a little bit of money. It could really be absolutely anybody. Private money is arguably the best way to fund any deal because now you're not dealing with the bank or a lender, so their rules are gonna be a lot less strict than even if you were getting a hard money loan. And they can move really, really quickly. If you call your grandma and you need the $250,000 to close, I'm sure she would have no problem wiring the money and making it work. And the last way to fund your next fix and flip is probably one of the most interesting ones, and I actually haven't done it yet myself, but I'm looking at acquiring a couple properties like that right now. When you sell or finance a property, it would essentially be like buying this property right here, and the seller owns the property free and clear, meaning that they don't have a mortgage. Now, all of a sudden, you want to buy this property, and instead of going out and getting a mortgage, you can actually have that seller sell the property to you and hold the mortgage for it. Now, instead of paying the bank, you're just paying the seller back because you're financing that property. And the second way to create a finance would be subject to, which is subject to the existing loan. Now, let's say I want to buy this property again, but now the seller does not own it free and clear. They actually have a mortgage. I want to buy it for $200,000. They have a $190,000 mortgage. So what I'm gonna do and what I'm gonna pitch to the seller is to take this property subject to. Instead of paying off the mortgage, all we would do is take on the mortgage ourselves. We would start making the payment. So now, even though we just bought this property, we don't have to go to the bank and ask them for a mortgage because this property already has a mortgage on it. All we're gonna do is inherit this mortgage and start paying it. Now, I know it's a little bit overwhelming. If you would have told me this back when I didn't know a thing about real estate, my mind would have absolutely exploded. But now that I know a little bit more about it, it's great to know that there's a ton of different options and that real estate can be so accessible to everybody, no matter how much income you have, no matter how much cash you have, no matter who you know that has money, you could still get in and fund deals. So instead of focusing and stressing out on how am I gonna fund this next deal, how am I gonna get into real estate investing, instead focus on finding deals, find off-market deals that are really, really good deals, and people are gonna definitely lend you that money. Hopefully you guys enjoyed this video, that I killed off some of the misconceptions you had about funding real estate. Maybe it becomes a lot less stressful now. Don't worry about the money, go out, enjoy yourself, find deals, and I guarantee that you will succeed in real estate. Make sure you guys like and subscribe to this channel. I look forward to making a lot more videos for you guys, so definitely make sure to comment the things that you wanna see, things you have questions on, and reach out to me on all my social medias. I look forward to answering any questions you have and making more videos in the future. See you guys later.